Hi guys. Welcome to Mark Finance. In this video, we will talk about finance. So before starting this video, please like this video and subscribe to my channel for future updates. Let's start. What is finance? The word finance refers to economic pursuits that sustain the existence of people, corporations, and governments. These include banking, borrowing, saving, and investing, to name a few. The study of money and financial instruments that are a part of a nation's financial system are also referred to as finance. Types of finance. Every entity, including people, businesses, and governments, needs money to operate. Consequently, there are three basic subcategories of the financial industry. 1. Personal finance. Personal finance is unique to a person's circumstances and activities. As a result, linked financial strategies are heavily influenced by an individual's income, living expenses, ambitions, and preferences. Financial planning entails examining an individual's existing financial situation in order to develop strategies for future requirements. Within financial restrictions, financial planning entails examining an individual's existing financial situation. People must, for instance, save money for retirement. To do that, they must set aside or invest enough cash throughout their working careers to cover their long-term goals. Personal finance encompasses decisions of this nature involving money management. A wide number of actions fall under the umbrella of personal finance, including using or getting financial goods, including credit cards, insurance, mortgages, and different kinds of investments. Due to the widespread use of checking and savings accounts as well as online and mobile payment services like PayPal and Venmo, banking is also regarded as a part of personal finance. 2. Corporate finance. The financial activities involved in managing a corporation are referred to as corporate finance. To supervise those financial activities, a division or department is typically established. For instance, a big business could have to choose between issuing bonds or selling shares to raise more money. Investment banks may offer the company advice on these matters and assist in the marketing of the securities. Startups may obtain funding from venture capitalists or angel investors in exchange for a share of the company. If a business succeeds and decides to go public, it will launch an initial public offering, IPO, to sell shares on a stock exchange and raise money. In other instances, a business with growth objectives may need to choose which initiatives to finance and which to put on hold in order to efficiently and successfully budget its money. Corporate finance encompasses all of these choices. 3. Public finance. Tax, expenditure, budgeting, and debt issuance policies are all aspects of public finance that have an impact on how a government pays for its public services. It is a component of monetary policy. By monitoring the distribution of resources, the allocation of income, and the stability of the economy, the federal and state governments contribute to preventing market failure. The majority of regular funding is obtained through taxes. Government spending is also financed in part through borrowing from banks, insurance companies, and other countries. A government organization must manage finances in daily operations, as well as social and fiscal issues. A government is expected to provide suitable social programs for its tax-paying citizenry. In order for people to be able to save and feel secure about their money, it must preserve economic stability. What are financial activities? The acts and transactions that organizations, governments, and people perform in order to advance their economic objectives are referred to as financial activities. They are tasks that entail the influx or emigration of funds, purchasing and selling goods or assets, issuing stocks, starting loan, and keeping track of accounts are a few examples. A firm engages in financial activity when it sells shares and pays off its debt. When people borrow money and governments impose taxes to achieve particular financial goals, they are engaging in financial activities. Is the financial services industry important? Yes. Financial service providers have always been crucial since they aid in the facilitation of financial transactions for both consumers and corporations. The financial services sector is significant because it affects how well a nation's economy is doing. By the end of 2021, the financial services sector was projected to account for around 24% of the world GDP. How can I learn finance? Undergraduates majoring in finance will study the ins and outs of college students. Your knowledge base will grow and your skills will be improved with a master's in finance. Additionally, an MBA will cover some fundamentals of corporate finance and related subjects. The Chartered Financial Analyst, CFA, self-study program is a demanding set of 3 challenging exams that results in a globally recognized credential in finance for those who have already graduated without a finance degree. There are also other, more detailed industry requirements, such as the Certified Financial Planner, CFP. What is the purpose of finance? Finance entails selling and trading securities, as well as borrowing and lending, investing, and raising funds. These endeavors serve to enable businesses and people to finance certain activities or projects today, with repayment to be based on future cash streams from such efforts. People wouldn't be able to afford to buy homes and businesses wouldn't be able to grow and expand as they can now without finance. Therefore, finance makes it possible to allocate capital resources more effectively. So this is our today's video, guys. If you like this video, don't forget to subscribe my channel or hit the bell icon.